This is True News. I'm Rick Wiles. The $2.2 trillion repurchase agreement market, part of the inner workings of the U.S. financial system, is facing what could be another strain as the year comes to a close. That could have wider implications than just Wall Street. A flash stress in the market in September meant that cash available to short-term borrowers all but dried up as demand for funds to settle Treasury purchases and pay corporate taxes overwhelmed loans made available in the repurchase agreement repo market. Interest rates in the U.S. money markets shot up to as high as 10% for some overnight loans, more than 4 times the Fed's rate. Now, since September, the New York Federal Reserve has offered daily operations where it injects liquidity into the overnight market, in addition to frequent offerings of longer-term loans. Now, to reduce the risk of further disruption, some market participants say they expect the Fed to set up a permanent backstop for the market known as the Standing Repo Facility. Fed Chair Jerome Powell said Wednesday that officials are dedicated to keeping money markets calm through the end of this year. Now, you're going to be surprised when you hear the amount of funny money the Fed plans to pump into the repo market over the next several weeks. Doc Burkhart and Edward Zoll are here to discuss it and a lot more on this edition of True News. Doc, I walked into your office about an hour or two ago and I said, Doc, grip the sides of your chair. I'm going to show you something.
Right. And when you showed it, I was like, you've got to be kidding me, because the forecast we had yesterday about where we're going forward here in the repo market, once again, the repo market is what the banks need to have to stay liquid. They need cash on hand to pay obligations. They were projecting yesterday 50 billion, right? That was, that was at Zoltan, the Magnificent was forecasting that.
And that was coming from Scott Skirm,
that's right,
from Curvature Securities.
Number,
50 billion. He was saying 50 billion this Monday and 50 billion the next Monday.
Right.
And we said, wow, that's a lot of money.
So they were forecast before the end of the year about 150 billion. Forget that number. Just throw that out the window. Zero Hedge is reporting today, and we get that still up on the screen, number one here. Liquidity injected into the market, not of 150, not 200, but $500 billion between now and the end of the year.
That's $500 billion.
Yes.
How do you wrap your mind around this, that the Fed must pump $500 billion into the repo market over the Christmas, New Year's holiday to keep the system afloat?
When a number gets so big, it becomes, meaningless at some point. That's what these numbers have become now. I mean, the number is just so huge. And what triggered this whole cycle here? We'll go back to September 15th. And there were a couple things that played into that. But one thing that played into it, and I think the Fed is thinking about it this week as well, September 15th marked the tax liabilities for the third quarter, actually from the second quarter, beginning of the third quarter. And that forced a lot of these folks that had Treasury obligations to pay their quarterly taxes. That was part of it. That was part of the domino effect that occurred. Another payment now is due this week, Rick, on the 15th, this coming Sunday, for tax liabilities on Treasury notes and bonds. And so the Fed right now, they're thinking ahead and saying, we've got to pump a lot more liquidity into the market. And part of it, too, I think, is in response to some of these remarks from yesterday, too, that they're saying we can't let this fail because we can't let these guys be right in all of this. But the problem is, Rick, if there is a shortage in the markets, the stock market, NASDAQ, S&P, they should be responding not by expansion. They should be contracting right now. But what are they doing? S&P is at its highest today, ever. We've had other records in the past couple weeks. This money they're pumping into the markets, Rick, where is it going? It's getting funneled to everybody. They're spreading this wealth out to everyone.
It's like legalized money laundering.
Yes.
Is that what it is?
That's basically what it is at some point.
The logic in it doesn't even make sense because part of this is being sold as like a safety parachute. We're setting this up to avoid this this repo crisis, and somehow there won't be an issue after the new year when we're in 2020. If you think about it, they've been doing between 35 and 75 billion a day in these repurchase agreements.
Right.
They're only putting in 500 billion. That's a lot already. I'm not saying only. Only think about this. That's only 10 days worth. If they're doing 35 to 70 billion a day, that's only 10 days worth of what they've already been doing. This is clearly not going to solve what's already been a 2-month crisis of repurchase liquidity issues.
And what's going to happen after the first of the year, Rick? Are we good? Now, this month it's 500 billion. Is January 1st, is it going to be 1 trillion moving forward? Because think
Where
about
does the money come from?
Right.
We're talking about 1/4 of the entire budget for the Pentagon. It's being spent here in about 10 to 15 days.
Where does the New York Fed get $500 billion?
They pick cotton fields and make more money. That's what they do. Or they digitally create it. That's what they really do.
Debase the currency.
The future wealth of Americans.
Now, think about this, though, Rick. There comes a point where it's got to stop, or at least you think it would. But imagine if there was a broken ATM on your street corner, right? And you go and put your ATM card in there, and you keep taking money out. And then, you're getting as much cash as you can. Well, wow, this is great.
It's not right.
Right. You know it's not right, but at the same time,
the money won't stop coming.
And will you tell a friend or two about it?
I might text somebody.
You might tell somebody, and that's what's happening.
At least come down here and look at it. Watch it.
It's 24/7. You don't even go to work anymore.
This busted the ATM machine at the Fed that's printing out money right now. These guys are starting to catch on. That's why you see this ballooning. That's why you see it going. But there comes a point where it's got to stop. The next stop on this train is going to be things like negative interest rates. You're going to see it here at some point. You're going to see increased fees from banks. You're going to see that. What's next? They've got to rob somebody. They've already robbed the money markets accounts a couple of years ago by converting the cash accounts over to guaranteed treasury bonds. Mm-hmm. So they took the cash away from that. And now, what's next after this? Is it corporate bank accounts? Is it personal bank accounts? They've got to come up with the assets to cover these obligations.
Retirement funds?
Everything is open for collection.
You're talking about bail-ins, if they're going out to personal accounts.
Yes, but when Obama was in, they were floating an idea of kind of nationalizing retirement funds where it was going to be a federal mandate that a percentage of retirement investment funds had to be invested in U.S. Treasuries, meaning you're buying the government's debt.
Right.
So maybe they're going to go in a direction like that. Whether it's this, $500 billion over the next 2 weeks by the Fed to keep the repo market going, the politics of what we have going on, the impeachment of the president, you just go down the list of everything that's going on in this country. And the feeling that you get is that you're riding on the crazy train.
Right.
And the train, everybody knows it's the crazy train, and it's going faster and faster, and everybody knows it's going to fly off the tracks.
I'll take your picture a little bit further, Rick. Imagine you're on a runaway train, and you know you're on the runaway train. You see sparks coming off the tracks, and you see smoke, and everything. But the buffet is open and it's unlimited.
Yes.
Let's get in on the buffet.
That's what I mean. That's what I mean.
They're putting more and more
the buffet on the
into
train. They're enjoying the food. They're enjoying everything that's going on, and in the back of your mind, we're on a runaway train. But hey, free lobster up on the buffet.
That's what I mean, Doc. People are making themselves deny what they see happening
because they assume that things like low unemployment, all these other things that we're being told are great signs of the economy. The stock market is exploding, it's bigger than ever, and all these other things. That's the buffet on the train. Right.
It's a cognitive dissonance. We're gaslighting ourselves into thinking this reality can carry on forever.
Yeah, so what the Fed has been doing, Edward, since 2008 crisis with the bailouts and then the TARP and all the money, the QE that they started pumping into the economy, the Federal Reserve was purchasing securities and debt. I mean, it's financial incest where the the central bank of the country is buying the debt of the country.
And bad debt at that.
Right.
Debt that not likely is to be paid back anytime
Yes.
soon.
I mean, it would be like, I try to make, I like to bring it down to earth. Okay, so you and your wife, Morgan, let's say you're the spendthrift in the family, and you're just charging, you're running every credit card up that you've got, and you're borrowing money, and you're shame when you ever, but imagine your wife, Morgan, is borrowing money to pay
My spending habit.
pay for your spending habits, okay? And she's actually lending you. That's really what it is. That your wife is lending you money to spend recklessly, okay? That's a recipe for bankruptcy.
Yes.
And so this is what this country has been doing for a long time, but at an extreme rate since 2008. And there are men and women, educated men and women, who know this won't work. This will end in a colossal financial debacle that will shake the world. And yet everybody, they're down at the buffet on the crazy train.
Right. And so the impeachment circus that we see going on in Washington, D.C., it's the clown show.
Yes.
It's the clowns coming out of the crazy car in the middle of the three-ring circus. Everyone's focus is on them and everything going on. Meanwhile, they're parading elephants through the big top. This is the elephant in the big top. In fact, this is a whole train of elephants in the big top, because once there's going to be something, it may be a catastrophic event. It might be, failures to meet Christmas budgets by retail stores at the end of the year. It could be a major storm that barrels through the U.S. here over the next few weeks or few months. One crisis, one major event could be the trigger point, the flash point that suddenly all the air is being let out real quickly. You see stocks drop, and then all these bets are called all at once.
We have the Fed statement that they put out this afternoon. We can put it up on the screen. The New York Fed, paragraph 2 says, the desk will continue to offer 2-week term repo operations twice per week, 4 of which span year end. In addition, the desk will also offer another longer maturity term repo operation that spans year end. The amount offered in this operation will be at least $50 billion. Then the third paragraph, overnight repo operations will continue to be held each day. On December 31st, 2019 and January 2nd, 2020, the overnight repo offering will increase to $150 billion, at least $150 billion. In addition, on December 30th, 2019, the desk will offer a $75 billion repo that settles on December 31st, 2019 and matures on January 2nd, 2020. And then the next paragraph says the desk intends to adjust the timing and amounts of repo operations as needed to mitigate the risk of money market pressures that could adversely affect policy implementation consistent with the directive from the FOMC. And then we have a chart from the Fed that shows there's the amount of money. Doc, look at these amounts of money on these specific dates.
Right, you start adding up all those figures. I know some of you are watching this and you might be tuning out already, but you need to understand how important these numbers are, because basically imagine it's your own bank statement, and they're telling you this is the amount of debits that are going to be hitting across your account over the next few weeks here. And the debits on your account now are going to total $500 billion, $500 billion of new debt. This is going to bring the Fed's obligations now to a record high of $4.5 trillion. That's a trillion with a T of obligations that the Federal Reserve now will have to shoulder. And
Doctor,
they don't pay that bill, someone else does.
To put it in perspective for the average viewer, what if your bank called you tomorrow morning and said, over the next 2 weeks, you need to deposit $100,000 cash in your checking account. Could you come up with it?
I couldn't come up with $100,000. No, of course not. There'd be no.
What if you have to do it?
Or they take your house, they take your assets, take your car.
You have to do it.
I'm going to do everything I can to get $100,000. I'm going to do whatever I need to do.
Okay, this is what's happening in the banking system right now. The banks are saying, we need $500 billion in the next 2 weeks in our checking account. That's what the banks are saying.
Right.
And a tap in the federal government for that.
It's not that the feds are saying, hey, we got an extra $500 billion. We don't know what to do with it. It's Christmas time. Merry Christmas. Here it is. No, the banks are telling the Fed, we need $500 billion in the bank's checking account, not the customer's checking account, in the bank's checking account.
For the obligations the banks have.
Yes, for the bank's bills. They need a combined of all the banks in the country. They need $500 billion before New Year's Day.
Now, it used to be that the repo market would fluctuate anywhere from 50 to 75 million per day. Okay, usually it would fluctuate somewhere around the $25 million mark per day. But that's all the banks in North America. They're borrowing across that for overnight funds. You know, we start talking these numbers, Rick. We're talking, tens of billions of dollars per day. That's increased over 100 times.
Doc, if this is $500 billion over 2 weeks, that's $1 trillion a month. Yeah. Is the Fed in 2020 going to put $12 trillion in the repo market?
I don't see that happening.
Could we possibly even be here next year at this time if the Fed is putting $1 trillion per month? Can we even be here? Would there be anything left of the country? Or would the country be insolvent? At what point is the nation declared insolvent?
Well, what is making me curious about the whole situation, Rick, is what are they hoping for? What event are they hoping for that's going to cause this to recover?
World War?
I mean, that's what you really need to be asking yourself. What are they hoping for? Because they have to be thinking to themselves, we can't keep putting this out there. We've got to get this back at some point, unless the plan is to really blow it up.
Well, think about it.
That's the only other option.
All the oil in Syria wouldn't even cover this. I mean, if maybe their idea is we'll start taking resources from other countries, like what we've done in Syria, that wouldn't even cover what we're talking about here.
No. You have to blow up the whole system and level the field and start over. It's either blow it up or watch it implode. And it's imploding right now. And they can't stop the implosion. Doc, we're 11 years into this crisis.
Right.
11 years.
And we learned nothing. Or maybe we did learn something. We learned that we can get away with a lot. Maybe that's what we've learned. That we can get away with spending as much as we can, doing as much as we can, taking as many risks as we can. Oh, don't worry about those tranches this time around. It's going to be okay. We'll get this covered. Happy days are here again. The economy is growing. The stock market's 100,000. Whatever. At what point will they say, "Hey, we beat it. We made it through"? I don't see how they can at this point.
They can't. There's no end to it.
I mean, unless
it's QE to infinity.
Yeah.
Until the entire system breaks, and a new world economic system is built in the aftermath of the crash. That's the picture that you have.
Right.
That's the scenario. One good story here. The White House has reached a deal in principle with China to resolve the 17-month U.S.-China trade war. The agreement is still being formulated, but China and the United States, according to sources talking to Reuters, the U.S. and China have reached an agreement in principle.
Well, and this also impacts the repo market too.
Yes.
Because one of the factors that could trigger that event was what was going to happen on December 16th. Well, that was going to be when the new Chinese tariffs kicked in. Now that's been put on the table. So that's one factor that's not going to be in the calculation on the repo market.
Maybe that's why the U.S. basically folded in some of their demands with China.
That's what I'm thinking, Rick, that they saw this train coming next Monday, and the U.S. wasn't prepared for it, and they said, this could be a trigger event on the repo market.
Because the U.S. gave in on some things. Mm-hmm. A sudden change. That's probably what it is, Doc. Hey.